The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. And let me tell you something, folks. The people in Chicago have taken the hedge funds to the woodshed today. I haven't seen action like this in 3-4 years, maybe longer. We had closed up a little bit. We thought there was going to be a bearish response because the market had made these 382 retracements, and they had held even during the weather scare last night. And then when they opened, they took this thing straight up in the soybeans, up 40 cents. And guess what, boys and girls? Down 40 cents. And boy, let me tell you, some of those hedge funds really got hammered, because when you see all that buying coming in, that's big buying, and when it comes down, it's big selling. So a lot of stuff has happened there, going on. We did make the ABCD pattern in the E-mini S&P at the 42.28 level. We sold off a tiny bit from there, whether that means much yet or not, but that is an ABCD pattern. Now, there was one market that was really getting a lot of press today, and so I went in and I said, well, let's see what we're looking at here as far as patterns, and that was in the crude oil market. They were telling us that crude oil was approaching $69 a barrel, and so what I did is I went into a 15-minute chart and I brought it up here, and you'll see here that we were looking at the 61%, 1.618 expansion there at 68.38. The high was a 68.88, and we use a 70-point pip with 69.02. So that one worked okay. It's now trading $1 a barrel under that, folks. So that's an interesting one to look at. Okay, now Mr. Z's telling us that CFTC has increased position limits, so more spec money will come into the grains. Well, that makes sense because there's so much going on in there. So we'll see what's happening. I don't follow that too much, but Rich Anderson does, and he did alert me to that fact. So that's the more players in the game, the better off it is, folks. So I'm just thinking that it's something that we're having tremendous volatility here today. I mean, even me, who I've seen almost everything, was shocked. I mean, we had a 30 handle up and a 30 handle down in the S&P, folks. That's 60 handles. And so I don't know if this is a major top of any kind. We've been asked to take a look at the silver market because it has been acting much weaker than the gold all along. And if you'll notice here today, this is a daily chart, and the high that we had today in the silver at 28.53 was an exact 78% retracement of the high that we made back at 28.92. Now, gold has gone up and made a 1.27 expansion. We did a little video on that last night for the folks. And you'll be able to see that we were looking for a high to come in at around 1920. I think, 1921. The high was 19.19. And then, of course, it dropped $19 an ounce, and then has since back, bounced up a little bit. So anyway, those are a few of the things that are happening in the market, but they're really, really wild. That's so we'll see what that is. We'll be able to see if that's going to be the case. Let's hold on here for 1 second here, and I wanted to bring to your attention the Bitcoin, because it has held at 32. Oh, shut the front door just a minute. By the way, folks, our guest today will be Tom Huguard. Tomorrow, our guest will be Arch Crawford. Then we're going to have Jerome Bressert and Jeff Huge from Alpha Insights will be our guest on Thursday and Friday, so we have a full platform. And then I'm happy to announce that Stan Harley is going to be back with us on the show next week. So we'll have Stan on early in the week, hopefully Monday or Tuesday, and we'll be able to see how that is moving on. I had so much email about Tesla because of the market being really strong. I said, this is a really bearish pattern in Tesla. I said this 636 level, 8 days up exactly at the 382, is an incredibly bearish pattern. I mean, it is just it's so bearish that, I couldn't even hold on just a second here. And there we go. Okay, yeah. Okay, yeah, there you can see here we had that 8-day rally. Well, the call today was it was going to be up a little bit. So all I can say is as long as it didn't go, sorry, folks, as long as it didn't get above 636, that it was still okay. It opened at 632 and immediately dropped 15 points. So that's telling you that was a major, major spot. Now, if it gets above that, it's off the way. See that. Yes, my travels were certainly unavailable, except going to the airport. There's just going to the airport's not too bad, folks. But getting on the airplane, the people are really uptight. I mean, everywhere. I mean, even I'm just really shocked. And then I see the fighting that's going on and stuff. It's really really quite sad to see this stuff unfold like this, because it's a toughie. That's the way I look at it anyway. So let's keep our minds going. Now, here is one that looks really good here. This is one that we'll look down the road here because we're not ready for it yet. But this is the August contract for hogs. You'll notice we got a beautiful ABCD pattern. If you notice the beautiful 6-day down at the 382 there at 105, and that tells us that we're due here just about the end of the week. See, the 7th will be next Monday. We want to be looking at live hogs up there at around that 119 and change level, because that could be a beautiful ABCD pattern with all the symmetry that you could possibly ask for. So that's one that's coming into the news, and we'll watch that also. Folks, one of the things that we do, or what I do anyway, is I watch how the market responds to this. Now, if you did anything over the weekend, the big thing that was out there was the fact that the British pound was breaking out above yearly highs, which it was. And how did it break it out above yearly highs, folks? It broke it out by 15 pips. I mean, hello, that's not buying. That's just, somebody just got scared at the wrong time. And what does it do? It breaks 100 points from that point. So that's where market feedback can be, very, very helpful. And we'll have to wait and see, if it is something. But the fact that it held it at that particular spot, was very, very interesting. So let's remind ourselves that we have to pay attention to what the market is trying to tell us. Here's an interesting quote that Rich Anderson sent us. I think you're going to like this. This is from the very famous Nobel Prize laureate in economics, Paul Krugman, and he talks about the growth of the internet will slow dramatically. Metcalfe's law becomes apparent. Most people have nothing to say to each other. By 2005, it will become clear that the internet impact on the economy has been no greater than the fax machine. Paul Krugman. What is he doing? Bitcoin is evil. Paul Krugman. Bitcoin isn't a new innovation. It's been around since 2009. It's not a stable store of value. It's definitely not a unit. And that's when Bitcoin has only been up 6,000% since that time. And that guy is a prize-winning economist. That's why I keep that book, The Experts Speak, by Christopher Sheff and Victor Havatsky from from Yale, because they show all the times expert speaks, and they didn't get it. And believe me, I'm one of the experts that speaks that way all the time, but I look at the charts. That's what I try to do. Hey, we'll be right back. 877-927-6648.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted the weekly chart of the Canadian dollar, and the same thing is true with the Canadian as it was with the British pound. The Canadian dollar took out the high from 4 years ago. Let me repeat that. Took out the high from 4 years ago by 3 pips. Hello, 3 pips? This is a bullish sign? I mean, all you had to do was to sell it and put a 5-pip stop on it, and you'd already have a $250 profit. So when you hear these breakouts that you hear about on all these things, look at the charts. You know, try to figure out what's really happening. The fact that the crude oil, and stop and think of this now, folks. We had a high in the crude oil about 2 months ago, up there at that 68.55 level. Okay, now this morning when crude oil was up around 68.60. Okay, they were screaming about this huge breakout that was going on, and all I did was take the 15-minute chart and see, is there anything up here that might tell us there could be a little bit of resistance? And there was. And the market broke about $1.50. Does it always work that way? Of course not. But all I'm trying to do is to find out what the market feedback is, and then look to see where the buyers and sellers are just by watching the price action. That there's no oscillators or anything that I can use that will give me any more information than watching that. So I hope that helps. You know, that's it. Now, one of the stocks that's been in a great deal of trouble here recently, I'm going to bring this up, and that is the get this up here. You'll be able to see. This is Mr. Appel. You notice here that we've had some lower tops in here. We've got a head and shoulders pattern working that we've mentioned several times. But the fact is that this market can't rally over the past 6 weeks. It can't rally past a 382. That's why if you looked at all the 382s that we posted in the newsletter this week, they all worked. I mean, the only one that didn't work, of course, was the grains, and that was mainly because of the weather report. The weather came in, blistering hot, and then what happens? The soybeans drop 40 cents in the blistering hot weather. And so anyway, those are all I'm trying to do is to tell you that, you got to keep your mind wide open on this stuff, folks, because they're going to feed you more baloney out here than we probably will ever see in 2 or 3 lifetimes. So remind ourselves that you can do this, but you've got to use just a tiny bit of common sense and to read the patterns correctly, and you should be doing okay. Someone's asked a question, is that a buy order in the August hogs? No, it's not. I'm just saying that the pattern will be completing right around June the 7th. That's all what we're really watching for. I hope that's it. If you remember a pattern that we talked about, that we don't trade this, but we talked about, this is the pattern in the semiconductors. You'll notice that we had that double top up there at 258. Then we had the ABCD down. Look, it stops exactly at the 78% level. And Friday, where does it go? It stops exactly at the 78% level. Now, I don't know how much higher it was today, but that'd be interesting to know that if the SMH took out 250, if someone would be so kind as to let me know, because that was a perfect 78% level. So we'll see. Trade what you see, not what you think. Well, actually, that title was done by Leslie Juicel's husband, Gary. He was the one, 248. See, so it never took out that high. 250 was a 786. But he basically thought of it. It was. It was exactly that. Trade what you see, not what you think, and that turned out to be a really good book title, and it was a pretty good book. It won a few awards, but now it's a long time ago. All right, let's move on to a couple things that I think are relatively important. Here is where we stand here. Is with some of the speculation that's going on, folks, and that's why when we see some of this stuff unfolding, it's going to be mind-boggling to say the least. This is if we ever do return to Earth. Now, this is from our friends out there near Atlanta, the Elliott Wave boys, and as you can see, the extensions that we have here. But the most important one is the leveraged bull-to-bear ratio on the Ridex. That's because that's important. That's mom and pop stuff. So when they shake this tree, and I don't know when they're going to, but when they do shake this tree, there's not going to be many walnuts staying in that tree. I can tell you that right now. This thing is going to really come unglued. Now, I don't think it's going to be a crash type thing, but it's going to hurt some people. I mean, you're seeing signs of it, all across the board. I don't know much about these CPACs that are out here where these people put their money together. It's just like a pool that they had back in the 20s, buyer pools, same thing. That's it. Yeah, leverage position. What could go wrong? And they're heavily leveraged. Leverage is great, folks, until it works the opposite way. That's what learned my lesson back in 1974 into the crash. And thank God I learned that lesson because I didn't give up. And that's only been, 56 years ago? Are you kidding me? Shut the front door and raise the rent. Anyway, I want to talk a little bit about this trade, too, because we were mentioning it last week from our good friend, Mr. Bartolioni. And you'll notice here it went exactly to that exactamundo that we were just talking about, folks. It made a higher high. This was the lower low by 3 pips, and there it was. So when you watch for those things and keep your limit minder on, and when it hits there, just to see it, because if it goes blasting through there, shut the front door. It's going to go a lot higher. But until that happens, you'll be able to see what was going on. Z said his year was 1987. Well, 1987, I was on the right side of that market, but I was so darn scared to death that my best position, well, I was short some S&P Z, but I was long bonds. I was really bullish bonds. And with the Dow down 400, 500 points, the bonds were down not even a half a point. And I was just, I was more worried about that position than all the money I was making in the S&P. So what I do, I liquidated my bond position Z, and they went up for 13 handles without a correction. I mean, just boom, just like a rocket ship. 13 handles. I'll never forget it. I forget a lot of things, but that's one thing I'll have to remember. Okay, yeah, Groucho Marx. I was a big fan of the Marx Brothers. I don't know if you know this, but Zeppo Marx was married to Barbara Sinatra, and then she met Frank at a party at Frank's house, and that was the end of Frank's or Groucho's wedding with Zeppo's wedding with Barbara Sinatra, because they soon remarried and all that stuff. Anyway, I wasn't invited to that party either, so you can't mess with it. Hey, we're going to have Tommy Huguard's going to be on. He's got some really cool slides, folks, a little mini PowerPoint presentation that he's put some time in, and I think you'll like it. You'll be able to see that. David White just said, my memory is the second shortest thing I've got. It must be the hair, David, because that's what it is with me, too. Hey, let's take a break here, folks. Pay some bills. 877-927-6648. And remember, folks, do some nice things for your neighbors, because there's still folks out there. I mean, we're wide open here in Arizona, folks. Poker, full blast, no masks, nothing. It's wide open, food at the table, just like it was 2 years ago. And, it's amazing how one day everything turns just into gold, isn't it? We'll be right back. 877-927-6648.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The gold report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The gold report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The gold report comes with a 30-day money-back guarantee. Go to TFNN.com and order the gold report now. Protect your buying power. Order the gold report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I have on the line the person that in February of 2020 issued a major sell signal, and his name was, and still is, Tom Huguard. Tom, how are you doing?
I'm good. How are you, Larry?
I am very good, my friend. Very good. I've got the PowerPoint presentation up here. And what I'd like to do is, as soon as you're ready to change slides, I will just move the slide over so that folks can see it. How's that?
That sounds good to me.
Okay.
So we'll start off with a front page which is entitled "Major Stock Market High is Coming?" ? And
Okay.
I found some nice arguments. So if we go to slide number 2.
Okay.
Slide number 2 is simply just the date, just a way for you to remember the date. It's the 28th of June, 2021.
Okay. It's 27 days from today.
Indeed. And then on to slide number 3, which is my kind of disclaimer. What we're doing here and what I did back in 2020, I did it in many, many weeks before the actual high in 2020, is nothing more than reoccurring patterns, but it's a reoccurring pattern in time, not in price. And you know as well as I that as human beings, we love to forecast what's going to happen in the future. But what actually, I mean, that's what we're engaged with as speculators and investors. We think we have an insight into what's going to happen next. And so the operative word here is repetition. But I include a little cartoon just so everyone is mindful of that this is nothing but a prediction on my part. So if we then move on to slide number 4, which is the last text slide.
Okay.
And it basically says that many moons ago, I made a name for myself by predicting highs and lows using time cycles. And the human condition is such that we love a good old Nostradamus. But what I would like to do over the next 2 slides is to tell you how I did it in the past and why I've then come to call the 28th of June as a significant date where I think the market will make a high. So if you move on to slide number 5, This is the Dow Jones Index from the 1997 to 2004. And what you're seeing there are 3 blue lines. This is what I call the 72-week cycle. And I find that there seems to be a repetition in the Dow Jones Index of 72 weeks, which is also, would you believe it, about 500 calendar days. And as you can see on this chart here, it managed to nail some pretty significant highs and lows in the stock market, in the Dow Jones Index. If you then move on to slide number 6. Now, slide number 6 then moves a little bit ahead in time from 2006 to 2013. Now, I haven't highlighted all of the major turns, but I think the most significant turn was that the high of the financial markets in 2007 to the low, the bear market low in February 2009, was 72 weeks or 502 calendar days. And it was a very useful tool to have handy when you wanted to load up on your pension fund portfolio, as I did. And it made a significant return, which is why I like to share this with people. So I then move on to slide number 7, but the next slide. And that goes to show how I came on your program and how I nailed the high in February 2020. And it's nothing more but the same pattern reoccurring.
I got the wrong slide, Chief. Hold on just a minute. I have trouble when I go past 5 numbers, so when you get to 6 or 7, I have to be reminded.
It does get tricky at times. I deeply sympathize. The slide we're looking for is the slide after the 2007-2009 financial crisis. Mm-hmm. It's the one that shows the high in 2020. And on my slide is slide number 7.
Yep, we've shown that one. Yes, sir.
Okay, so now we're at slide number 8, and that's a big shout out going to a gentleman called Atbo. I don't know his real name, but there you go. He points out through a gentleman called Charles Hughes Smith the bubble symmetry. And I started playing around with the idea that maybe a major high was coming. So if you move on to the next slide.
Okay.
If we have bubble symmetry, and we had a major high in 2020 that came from a 72-week high prior, but we also had a low-to-low of 65 weeks. What happens if we project 72 weeks from the high that we saw in January 2020? Well, if you use those two time cycles to create this bubble symmetry and you combine it with my time cycle, then both of them point to 72 weeks from the high in 2020, which was the all-time high, and then the low made a month later, plus 65 weeks, will then both point to the 28th of June 2021 as the high of the market. And what I think is interesting here is that this is a weekly chart. So it is the usual caveat. You have to give it plus one, minus one.
Okay.
That's why I've come up. But I think the most important slide is the next one. And, you know, it's a little risque. It's a little daring. But as we move on to the next slide, it sort of leads us to believe that we are looking at a bare bottom of the bride. But the reality is that we're looking at the shoulder of the lady that stands behind the bride. And I just wanted to use this as my kind of disclaimer for saying this is just a prediction. So be careful what you think you see, because it may actually not be what you think it is. And this picture is nowhere near as rude as you might think.
He caught me good on this one, folks, because I didn't see it until he showed it to me. That's how sick, demented, and perverted I was. Folks, if you look at this picture really close, that's not really her bum. That's the shoulder of the girl standing behind him. But that I think that's what you trade, what you see, not what you think. Oh, dear.
Indeed.
Yeah.
Yes, well, I'm glad that the censorship of TTFN didn't censor this one out. But at least now I've shared with you why I think the 28th of June could be a very significant week for us.
Okay, now, on the 25th of June, which happens to be a Friday, I am penciling you in here for a little 10-minute session, and we'll see where we stand with this, okay?
Sounds
because
good to me.
You have a tendency to be right a lot, Tom, and you're wrong a lot, but you're right a lot more than you're wrong. But I think that would be good if we had you on to discuss this, because that 72-week cycle, you've been showing that for years, and gee, it really does work pretty well. So I think we'll have you back.
It's not bad, is it?
No, not bad. Are you kidding me? Shut the front door, man. When they hit those numbers like that, it's really. I think we're going to see volatility, Tom, like we've never seen before, though. I mean, it's just going to get
be nice.
It's really crazy. Yeah. Hey, thanks for joining us, my friend, and we'll have you
anytime,
on soon.
Larry.
And may God bless and be safe. How's your injury? You feeling better?
Much better. Thank you so much for asking, Larry. Take care.
Okay. You bet.
Bye-bye.
We'll be right back, folks. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, folks, I was asked to post the ABCD 3-drive pattern in the the S&P chart, so I just want to put that up there to show you the 4228. Hold on here. I think we have someone calling in. Is that correct? Yep. Mr. Z is saying that some of these things hit with unique precision. Yes, they do. And you know, Z, it's really strange because it's just important when they don't hit, because that's telling you something that you're wrong. And that's what the real beauty of the fib numbers is. It's not the fact that they can be right a lot. It's the fact that when they're wrong, that's telling you that you are wrong. Remember the words of Roy Longstreet. The first mistake teaches. The second mistake kills. The first mistake is you put a bad trade on. The bad thing is you didn't do anything about it. And that's the one thing that you want to do. That's why when we were looking at that crude oil chart this morning with that potential, 3-drive to a top and multiple ABCDs, we knew that that was potential. But we knew that let's just bring it up here and discuss it, because I think it's important that you see some of the things that we try to do here, because you got to learn to do some of these things yourself, folks, because that's the fun part of it. But you notice you'll see all the numbers up there. You're looking at 68.38, and that's breaking out of the old high from a year or two ago at 68.25. Hello, operator. Hello. That is not a sign of great strength, boys and girls. And of course, the thing went up to 68.80. So took a heat, about $500 worth of heat, and now it's down $1.50 from that level. So that's what you have to do. Is you got to figure out what the risk factor is to see whether you're going to be right or not. You'd like to see them hit at that exact number. Sometimes they do, like they happen to do that in a few of those other things that we were looking at today. But that's pretty much what we're paying very, very close attention to. First of all, I wanted to thank some of the folks out here that have been kind enough to help their neighbors. I got some feedback on that, and it really makes me feel good when I see stuff like that happening. We're very fortunate today because my neighbor right next door, we have a townhouse here in Tucson up in the foothills, and the young lady is in Missouri, and she's got these gentlemen that are replacing the roof. And they were out there at 6 o'clock this morning at the break of day out there pounding and everything. And finally, some of the people called in and said, hey, don't do this, during the early morning hours. So they decided to come back after the show today, which will be in about 15 minutes. Then they'll be able to start hammering again. But I will be long since gone by then. I wanted to mention another one that is really important, and that is, and remember, folks, this debt thing has been going on for a long time. I don't understand it. All I know is that, the bonds have been hit badly. They're getting more more bearish all the time. We've mentioned it over and over again, and they keep drifting lower and lower. We do not have negative interest rates coming, boys and girls. That's not going to be in the that's not going to be in the play. And we saw that when we were looking a year and a half ago with those big ABCD patterns. Now you notice we look at from 2002. You can see what our debt to GDP is. Okay, that's been going on for so doggone long since World War II. So you can't trade off of something like that. It's good information for an economist like Paul Krugman and maybe Larry Summers, but not from an old cowboy out of Terre Haute, Indiana. I can't use that. I just need to look at the chart, and it tells me whether I want to be able to see. And believe me, the global debt bill is really bad in China. I mean, my goodness, they had to put the brakes on it today. They made the people rein the horns in a little bit over there. So. We'll see that. But we've got a lot of problems with liquidity, and I mentioned this here. This is where the problem's going to lie, folks, is in this Ridex thing, because these folks, that everything's great. Remember, they have not experienced anything really bad since February of last year, of 2020, when we had the COVID thing. That was a great buying opportunity when we went down into March 23rd. And again, hats off to our good friend Larry Williams, who said, this is it. We stopped going down today. And by golly, he has been flat out right. And I think we owe him a debt of service. And since we're talking about Larry Williams, let's just bring up his chart that he does a year in advance. And he brings us up here, and you'll see here that they're looking for the market to top sometime in May. Here we are in June, and we still made another new high. But after June, it starts to go down. Remember, sell in May and go away is one of the stronger seasonals that we have in the stock market. So that is another thing that makes the market look like it's moving in that direction. So we'll watch it very closely. But the stuff that we're seeing here, as far as volatility in these grains, and every grains and soybeans today has just been absolutely phenomenal. I mean, we're having weekly moves today, folks. I mean, we had an 80-cent move, actually, 80 up, 40 up, and 40 down in July soybeans. That's how wild it has been. So very exciting. If you catch a little bit of it once in a while, you do. So we'll be able to see if you do or not. Someone's asked a question about how do you understand about market feedback, folks. You just look at the chart and ask yourself, if a market's breaking into new high ground or new low ground, like you're seeing today. On the news, there were three of them. There was the Canadian dollar, there was the British pound, and there was the crude oil. All of them were on Bloomberg, and because it was a holiday, they were on all night, and it's the only thing I was watching. So I said, let's start watching it. And I had my limit minders in, and they took those out by just a little bit. And I said, well, it doesn't look like it's going to go anywhere from there. But that's what you try to do. Now, by the same token, you had these grain reports of this weather report that were incredibly bullish. And yet the market during the evening session on Sunday did very little. It wasn't until the market opened on Tuesday morning at 9:30 that the market rallied 40 cents up and 40 cents down in a period of about an hour and a half. Now, that is exhaustion. Somebody came in there with both guns blazing. By the time they got done shooting, they were out of bullets, and somebody was taking them to the woodshed. So that's why you've got to be very, very nimble in these things. So pay attention to that, and we'll be able to do it. We're going to try to have Rich on later this week on a cameo about this weather situation that we've got going on here, and also some of the things that are regarding the soybean oil, because they use that for energy as much as they do for cooking oil and stuff. So that's something that we need to watch very, very closely. It's very important. Now, one other thing that Rich talked about that, again, is a tad over my pay grade, and that is this is the velocity of money. And you'll see here the velocity of money is at one of the lowest levels we've had in the last 60 years. And the reasoning for that is people are not spending it. They're paying their credit cards and stuff off. They are doing some spending online stuff. But the velocity of money is just not moving like it should. And I don't know how that works for trading, because all I do is look at the little simple thing that old Mark used to whistle at when he was here in this office, AB equals CD. AB equals CD. That's all you need to get it right. Anyway, sometimes you're right, sometimes you're wrong, but it will get you in the right side of the market most of the time, but you will have times where you get banged around a little bit. So remind ourselves that these are not easy times, but they are going to be quite exciting. We got to pay a few bills here. Then we're going to come back 877-927-6648, and we will be happy to have any question that you might have. We'll be right back, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Okay, we're back, folks. And I posted the chart of Tesla just to show you the what's happened. We didn't take out the high of 636. We're now trading at 623. If you happen to be in that, you certainly have a risk-free trade going on. I don't trade stocks. I post these because there were so many of them making 382 retracements. We had Netflix, Amazon, Apple, and Tesla. Tesla being the easiest one because it was 8 days up to the exact, within 30 cents, folks, of a $600 stock. It made the exact 382, and so that's why I thought it would be interesting. I don't count that as a winning trade. I just bring it to your attention so that you understand, after listening to this for so long, you should be able to pick up, some of the ideas of how some of these things work. So I hope that gives you some indication. What I'm trying to do is to get you to understand that these patterns don't work all the time, but they work some of the time, and that some of the time is on the neighborhood of about 2 out of 3. And there's no golfer that wins 2 out of the 3 tournaments. There's no baseball player that hits 66 2/3%, and nobody shoots 3-pointers to 66% unless it's Pete Maravich. Anyway, let's remind ourselves, folks, to do something nice for those of you that need some help out there. And boy, believe me, even in Tucson here, it's just totally amazing to me how much trouble some people have. We have a neighbor that cannot drive, and so I do the pharmacy stuff and the food, and I was gone for a day, and she needed some things, so it was almost like Panicsville, but everything's cool now. Listen, folks, let's try to keep our eye on the prize here, because we're going to see some tremendous volatility like we've never seen before. This is really big today, what's happening in these grains and stuff, folks. This is big. Even in the stocks, look at, we're 40 up, 40 down, 200 up, 300 down. That's not action that for the faint of heart. So we must remind ourselves that that's what we're watching as we look here. So I hope that helps you, folks. So live every day in an attitude of gratitude, and may God bless. I'll see you on the flip side tomorrow with none other than Arch Crawford. We'll be right back on Wednesday.